expectations that we see prices weaker from here certainly have to, you would have thought, be increasingly being built in. The Chinese are clearly worried the data's going to be weak this weekend. Germany's just downgraded expectations for 2013. Why would I want to buy Brent? Why would I want to buy copper?
At least in the short term, there are in fact only few reasons to be optimistic on oil prices, also given current physical oversupply, but the long-term prospects are still positive. We expect OPEC producers to reduce output if oil prices continue their slide, given the higher need for oil prices to balance their budget, and demand should also pick up at lower prices. And all in all, the market balance should start to tighten in the second half of the year, given these prospects.
What is the lowest price that Saudi Arabia can tolerate?
Saudi Arabia repeatedly said that they consider an oil price of roughly $100 a barrel as preferable, and the break-even oil price, meaning the price oil producers need to balance their budget or their imports of goods and services, is roughly $80 to $90 a barrel.
So there is some wiggle room here, and we're certainly not at that level yet. If I look at the debt contract, if I start to look at the shape of the complex when it comes to Brent, we're in backwardation. That means the future prices are lower than the spot price at the front. Is it better to buy further out at the moment? Do you think that the shape of the complex is going to change?
We think that the forward curve should remain in backwardation in Brent due to the continued supply side risk coming from the Iran crisis. The import ban will become effective on July 1st. And it remains to be seen whether US will grant further waivers for oil consumers from Iran by end of June. And also we have still the production problems in the North Sea. So we think that the backwardation should remain in place, and so offers good values for investors due to the positive oil yield.
Is there an opportunity to trade WTI versus Brent? Obviously, we're starting to see WTI potentially about to become much more tradable. Is there an opportunity there?
In fact, we think that it might make sense to go long WTI with the prospect of the next 3 to 6 months. We expect a price gap between Brent and WTI to narrow considerably in the second half of the year due to the start of the reversed Seaway pipeline, which allows oil flowing from the storage hub at Cushing to the US Gulf Coast, 1 million barrels per week, which should allow the record high stocks at Cushing to come down somewhat in the next couple of months. It is not yet visible in the current data, but it's only a question of time when these Cushing stocks will come down.